So all eyes were on the Bank of Canada this morning, and I'm happy to say we lowered interest rates in our country by a quarter point. Was that a surprise? Definitely not. When you look at the slowdown in our economy, we're seeing exports slowing down by just under 30%. We're seeing business activity down by 10%. Slowdown in GDP. Jobs growth has been negative. We've lost almost 110,000 jobs in over the summer in the months of July and August. We're seeing negative right across the board right now, red everywhere. So should the Bank of Canada not cut interest rates? Well, if it's what the Prime Minister and Premier Ford says, it's all hands on deck. We need to do whatever we need to do to stimulate growth. Then yes, an interest rate cut is definitely needed. And we saw it earlier today. And I'll go out on a limb and say I would consider cutting again in October and maybe even one more time before the year is up. So we could see another cut, maybe as much as two more cuts, depending on how the data shakes out, especially with a 1.9% inflation rate. So let's move to our first illustration, Canada's inflation rate. And you can see there, 1.9% is the headline number. And if you look at some of the other data, taking into account what we call the CPI median and the CPI trim, these are other things. These are core numbers. It actually bumps up to about 3%, gradually moving higher, but the headline number seems to be staying in and around 2%. Our next chart shows Canadian employment change, and you can see what I just said, over 100,000 jobs, 107,000 jobs to be exact, were lost during the summer months. We want to see job growth, not job loss. And that, to me, is a big factor in why the Bank of Canada cut interest rates this morning. Our next chart, Canada's unemployment rate in August rose to 7.1%, highest we've seen in a long time. You'd have to go back to, I guess 2000, before 2022, 2021, 22, to see a number in that range. We've been hovering mid sixes for a little while, and now we've gone over 7%. So it is obviously not going in the right direction. The next chart we have is Canada's GDP. And once again, you can see we had negative GDP, negative 1.6%. The estimate was a lot better than that, but 1.6% GDP negative is not what we want to see. So once again, more negative numbers, more red that we're seeing with respect to the data. We need to do whatever we have to do. And I will go out as to say, and I've been a big proponent of this, as many of you know, and we just had the tax panel on earlier. What about a cut in taxes? To me, that is what we need next. Maybe Prime Minister Carney's watching our show today, and he'll consider cutting taxes, because I think that goes hand in hand with a cut in rates. Our next chart, our last chart, Bank of Canada policy interest rate. And you can see here where we sit. And after today's cut of a quarter point, we sit at 2.5%. So what the Bank of Canada did this morning, definitely not unexpected. It was totally expected. The question now becomes, what do we see going forward from the Bank of Canada?